Hello everyone, welcome to Options Discovery on John Lothy News' The Spread. My name is Esma Awas and I'll be your host throughout the series. In this episode, we'll be talking about technical and fundamental analysis in options trading. I also have a chance to sit down with Bret Kenwell, an options analyst at eToro. Bret shares more insight into these two types of analysis as well as his own experience trading with them. Let's get started by talking about what technical analysis is. Technical analysis is an approach to forecasting prices that examines the patterns of price change. It attempts to predict future financial price movements based on an examination of past price movements. Technical analysis can be applied to any security with historical trading data. This includes stocks, futures, commodities, currencies, or in our case, options. There are a few general assumptions in technical analysis that options traders should understand. Technical analysts believe that everything from a company's fundamentals to broader market factors are already priced into the stock. The only thing for analysts to do is analyze the price movement, which is viewed as the product of supply and demand for a particular security in the market. Due to the repetitive nature of price movements, history tends to repeat itself. These trends can be predictable because of common market sentiment like fear or excitement. Fundamental analysis is different from technical analysis because it is based on a security's intrinsic value. It includes a study of macroeconomic factors such as industry conditions, company management, and financial conditions. The major part of fundamental analysis for securities involves examining a company's financial statements. The analyst looks at revenue, expenses, assets, liabilities, and all other financial aspects of the company. Some of the financials that fundamental analysis looks at are earnings per share, PE ratio, and dividend yield. Now that we have a better understanding of both fundamental and technical analysis, we can look at how they're used for options. In technical analysis, support and resistance levels may help options traders determine entry and exit points for their trades. Options traders may look to buy calls when the underlying asset's price approaches support levels and buy puts when it approaches resistance levels. This is a relatively simple example of technical analysis. In reality, there are hundreds of technical indicators and ways to trade using them. Options traders can use technical analysis to select appropriate time frames for their trades. Shorter-term traders might focus on intraday or daily charts, while longer-term options traders might focus on weekly or monthly charts to identify broader trends. Technical analysis can also help traders manage risk and limit potential losses by setting stop-loss orders based on technical indicators. In fundamental analysis, earnings reports and other corporate events can point towards a price movement in the underlying asset. Options traders can use fundamental analysis to evaluate earnings expectations, revenue growth, profitability, and guidance provided by companies. Anticipating how the market will react to earnings announcements can help a trader choose the right options strategy. Options traders can look at the macroeconomic trends to assess the broader market environment and identify opportunities or risks that might affect the underlying asset's price. For example, a strong GDP growth report might indicate increased consumer spending and benefit certain sectors. This could lead options traders to choose more bullish strategies. To dig deeper into this topic, I sat down with Bret Kenwell, an options analyst at eToro. So without further ado, please enjoy this week's interview. All right, hello everyone. Welcome to another episode of Options Discovery. Today I am sitting down with Bret Kenwell. He's an options analyst at eToro. Bret, can you tell me a little bit more about yourself and how you got to where you are today?
Yeah, I'm not sure how far back you want me to go with that, but I'll go back through the archives just a tad. When I was in high school, we actually did a stock picking competition where we built mock portfolios on Yahoo Finance, and we tracked them through the semester. And once the class was over, whatever, semester ended, but I kind of kept following that portfolio through college, and that really just those few years after high school kind of kept me really interested in the market, kept me wanting to learn more. And, I pursued those through school. And then once I got out of school, I just stayed within the industry and just kind of kept working my way from that point forward. At first, obviously the money, was the biggest attraction. Is you see these huge gains in the market and all this, these stocks making these huge moves. But once I got more interested in it, and once I started to dig into it a little bit more, it felt so much more like a puzzle. It was this game where, you know, as much as you don't want to gamify the stock market necessarily, it felt kind of like it had game-like components to it. It was like a puzzle, and I just wanted to always solve it. And as I've gotten into it more, I realize it's not really a puzzle that can be solved. It's there's always like a missing piece to the puzzle. But it's one of those things. It's fun. You have to have a passion for it, I think, to have longevity in it. But if you have it, it's a really great place to be.
And I know you're talking about your high school experience, but what got you interested in the options industry specifically?
Yeah, options, it was just an extension of studying the market. I originally started kind of focusing more on fundamental analysis, and that was just a case of, studying in classes, and I'd go to the libraries and read the more fundamental related books on how to do certain analyses. And as I got more involved just on a more frequent basis in terms of activity in the market, on a more week to week, day to day basis, options just became kind of a natural extension of that curiosity. And there's be such drastic moves in the options market that I wanted to know why do they move so much? And options are so interesting because they, on the surface, they do really seem pretty simple. If you're bullish, you buy a call. If you're bearish, you buy a put. It's really not as simple as it would be a simple looking hood, but the engine's pretty complex underneath.
And I know you have a bit of experience with financial journalism. So, how does approaching options from a journalistic perspective differ from being like a standard trader or analyst?
Yeah, I'd say from my experience personally, the biggest difference would be who the end reader is in those scenarios. Like when I would write in more focused on financial journalism, it would be a lot of the readers would not be familiar with options, even the basics of options. And so to even throw in a little bit of options content could be pretty overwhelming to a lot of those readers. Whereas, covering options now or being more involved in the space, typically the people we find who are absorbing that content already have at least some sort of foundation of the options market. They understand how it works. They might not know all the different strategies, and that's part of the reason a lot of times why they're there is to try and learn a little bit more about it. But yeah, really just you're trying to help build that foundation, and they at least have a starting point to work with. So it's a lot easier than it is from the journalist side of things, in my experience anyway.
And what skills or lessons do you think translated over the most with the current work you're doing at eToro?
Just really sort of, you always have to have that, not a hook, but you have to have an amount of interest in the content, whether you're writing it for just the general market or you're really drilling into something fairly specific. It has to be interesting to the end reader or the end consumer if it's, say a video. Um, and it has to be well put together. It's got to be polished. It's got to be clean, fairly concise. People sometimes they like that like white paper deep dive, but a lot of times people kind of like to absorb the content and get on to the next thing that they're doing with their lives.
Yeah, and I understand it. I think like in the morning when I'm looking at the news, like if it's a longer than like a 10-minute segment, I'm like, I don't have time for that. So I
Yeah.
completely get that. But thanks for sharing a little bit more about yourself. I want to talk a little bit more about the main topic for this episode, which is technical and fundamental analysis and options. So, for those who don't know, can you describe what technical analysis is and how it works in the options industry?
Yeah, so I think at its core, technical analysis is really just looking at where buyers and sellers previously came together and then mapping those occurrences over and over and over. That's our chart, right? It's either a line or a bar chart, candlestick chart, how, sort of whatever your preference is, but it's thousands and millions of interactions, and whether that's, you're looking at an intraday chart or, a multi-week, multi-month chart. It shows the illustration of where that price has been. And within that pattern or within that analysis, you're looking for patterns. You're trying to find repeatable patterns. And the great thing about technical analysis is also the worst thing about technical analysis. It's that there's a million different strategies and a million different indicators, you know. Um, it that makes it great because there's kind of something there for everybody, I think, but it also makes it hard to discover what that is for you as an individual, right? I know for me it was really hard to find. I went through so many different strategies, probably made every mistake I could make, and I probably still have more to make, but it's one of those things where it really is there's something for everyone there. You just have to find what works for you. When it when it comes to technical analysis, there's for the most part, I'd say it falls into the categories of trend analysis, which is basically, is a stock trending higher? Is it trending lower? Is it putting in higher highs and higher lows, or is it doing the opposite? Is it trending lower, putting in lower highs and lower lows? That's a key identification for a lot of traders. So is support resistance levels, of course. That's a fairly basic and obvious one. And range trading is another pretty common one. Whereas, is the stock range bound? Is it basically pinballing and bouncing back and forth between two set levels, or is it, kind of forming a wedge where it's got higher lows and lower highs? That sort of thing would be another basic technical analysis, but most of them fall into those buckets.
And what are some of the different technical indicators used to confirm these trends?
Yeah, so again, that's one of those things where people use a million different indicators. The common ones, I'd say the moving averages are very, very common. But technical analysis can be as simple as a line. It can be a horizontal line right across the chart where that's been a floor of support or a ceiling of resistance. It can be, it can be a diagonal line where that's where those higher lows continue to come into play. So it can be really simple. With moving averages are fairly simple and basic. Sort of like Bollinger Bands are pretty common. Or it can be really complex equations that are part of someone's technical analysis. It really just depends on, the individual and what their aptitude is for technicals.
And so in technical analysis, what can cause emerging price trends to occur?
Right. So what I'll look at it from, I guess, my perspective, which would be, I like to find a stock or an index, an ETF, whatever. And I like to find one that breaks out over a resistance level, whether that resistance level was a former multi-month high, maybe it was like the prior 52-week high. I like to find a stock that breaks out over it and then comes back and holds that level as support. It's it's the market's way of saying the investors are ready for the next level, the next leg up, especially if it comes back to that prior resistance level and it holds as support. It's a really big behavioral shift, and it's a change in the price that is saying, hey, this was resistance, but now it's going to be support. And from a trader's perspective, you have a really good way of limiting your risk or managing your risk from that point forward. Where if it breaks back below that level, the stock's not ready yet. And I think that's where I really like to use technical analysis to find stocks that are looking for that next range or that next level to go.
And I know you were kind of talking about this a little bit earlier, but are there any limits to technical analysis that that traders should be aware of when trading options?
Yeah, definitely. I know we'll probably get into fundamental analysis here in a few minutes, but the technicals and the fundamentals, they both have maybe not, I don't want to say drawbacks necessarily, but they're not predictive. They can't give you, there's no holy grail, I guess is the easiest way of saying it. They can put a lot of the pieces together. Um, but it really boils down to, finding that repeatable pattern and then, seeing how it plays out. You just, most of the time going into a scenario, you don't know if it's going to work or not. You just know that the probabilities are lined up in a certain way that you're willing to take the risk.
So I'm glad you brought up fundamental analysis because my next few questions are kind of geared towards that. So what should options traders understand about fundamental analysis?
You know, the it's funny because when you look at fundamentals and technicals, they are in totally different camps for the most part. But Really, one is just an analysis of the trend, of the price trend, and another is an analysis of the business trend, right? And that's the fundamental side. If you can find, there's always debate between which one's better. I don't really fall in either camp. I really do prefer to blend the two together. And, if you can find a winning strategy using either one or blending them together, then by all means, I always say do what works for you. If you have a strategy and it works and it's repeatable, there's no reason to mess with it. Or there's always ways to iterate and improve it. But I always say, dude, don't abandon it just because, someone makes you feel like it's the wrong type of analysis. But when you look at fundamentals, you're looking more at, cash flows and margins and balance sheet power, earnings and revenue growth. You're sort of focusing on the more of the business and less on where the stock has been, where it could be going. You're trying to find an undervalued stock that will be more fairly valued by the market, or, if you're one who likes to sell, you're looking for something overvalued that will soon, come back to a more fair valuation. I think both have their place in the market. We wouldn't have the same market we have now if we didn't have these types of analyses, but I think you can make either one work. It's just really a matter of finding what works best for you.
And just to dig deeper into fundamental analysis, how does it differ in options trading compared to traditional equity trading?
Yeah, I'd say it really depends. It kind of honestly, it kind of depends on what the trader likes to do from a strategy perspective. You know, Looking at it from an options for, I don't look at it as an options first situation and then an analysis. I look at the analysis first and then I find a way to apply options to it if I can. And not all scenarios, at least for my style, then not all of them do fit. An option strategy doesn't always fit. But that's the way I look at it. So, in those circumstances, if I found a stock I liked on a fundamental basis, I would then look to see how its chart looks. And if its chart is cooperating the way I like, then I would look to add an options component to it. I really look at options as a tool, in a tool in the toolbox, not the only tool I have.
And would you say that fundamental analysis is better for short-term or long-term trading, and why?
I think that the consensus answer to that would be that it's probably better for a longer term analysis. But there are scenarios where fundamentals can play a big role in the short term. And I'll give you one example. It's hypothetical, but it's not something that is all that uncommon that we see in the market. If a company were to report an earnings and a revenue beat and issue good guidance, it's not uncommon. It would be uncommon for the stock to fall on that news, but it's not impossible, and it's not something that we don't ever see. There's a lot of moving parts in the market, and sometimes an earnings report can get kind of lost to either sentiment or investors' mood. Um, it can happen even just from a broad market event where the indices are down, several percent on a headline or a development that investors don't like. But, if the stock's fundamentals are okay and it reported, a decent quarter and it's relatively fairly valued, it's one of those scenarios where sometimes you see it open lower by 5 or 6% and it ends the day higher, and that's a lot of that can be attributed to fundamental analysis where people look at and say, this is a good quarter. This is a great company. I want to own this. I'm buying this dip. And, maybe it lines up with some technical levels too, prior resistance level, key moving average. But a lot of those scenarios, like in that case, it's earnings based. And to me, that's fundamental.
I hope you learned a little bit more about technical and fundamental analysis in options trading. I want to say a special thank you to Bret Kenwell for taking the time to talk with us. Thanks for watching, and I'll see you all in the next episode. If you're hungry for more options content, make sure to subscribe to the JLN YouTube channel and check out our social media accounts. Be sure to check out our website, johnlothiannews.com, Markets Wiki, and the John Lothian newsletter for more content.